Okay, welcome to today's session. So we're talking about trending and what ranging market from the former session. So today we will just be giving the example and uh, how you can actually spot them on the chart. Now looking at this chart, you see that here we have what a ranging market. It was what ranging. It was not actually trending. So market was stuck within this box, right? So when it's stuck within this box, you can actually see that this is what a ranging what market. All right. So if this is a ranging market, this also will also be what a ranging market. All right. Looking at this bullish candle here, market left the range. All right. Market left the range as kind of showing what we call a bullish candle. All right. After that, it went into another range again. So this is another what ranging market. So after the ranging market, market went into what a trending market. Why? Because it has what a direction, just like we said. It has what a direction. This actually has what a direction. All right. So this is a trending market. Why? Because it has a direction. So direction, market having a direction shows you that okay, this is what market is actually doing. All right. It shows you that this is actually what market is doing. It's either is what selling in that trending area or buying. So here automatically you can see that it's what selling. All right. So this is what a bearish trending market. So that is what bearish trending market. Bearish what trending market. So that is that. Now, if you look at this higher time frame view here, you can actually see initially market was trending to the upside. All right. So this is what we call a trend. Here you can actually see here market is trending to the downside. So this is uptrend, while this is a downtrend. It has direction to the what downside, right? It has direction to the downside. So basically, anytime you see market stock within a range, within an area, that is basically what we call a what a ranging market. When it has a direction, just like this is trending. A direction, this is what trending. Depending on the time frame, right? We talked about time frame. Let me bring your attention to that. We talked about time frame. So you can actually know that on weekly time frame, on weekly time frame, on weekly time frame, market can form. This is BTC. We talked about currency pair the last time and all. So we said market doesn't open weekend slash week opening. That is Saturday and Sunday, right? But on crypto, market open 24 hours and 7 times a week, like 24/7, right? So on crypto, that means on weekly time frame, you will have 7 daily candle. One candle on weekly time frame will print out what 7 daily candles. All right. So that is the basic things that you have to understand there. So now, if you go a little bit lower, now you understand that here, look at this. Market was actually trending here. It was trending to the downside, trending to the downside until it got into this range. So as it got into this range, it stuck into this range for a very long time. Market was was what trapped within this range. So that means this is what we call what a ranging market. A what ranging market. All right. So if this is a ranging market, after a ranging market, the next thing is what a trending market. Always note that whenever market is trapped within a range, that means with time a trended market will actually what come out. So without what uh without trending there will not be ranging. Without ranging there will not be trending. So two of them work together. So the entire wolf. So now here after the ranging market would left that range instantly to the downside. So telling you that here it has what a direction. It has a direction to what to the downside. All right. So this is the bearish trend. So that is all about trending market and ranging market. So the next topic we'll be talking about is what we call swing point. All right. We discuss it here and now. All right. So what is swing point? So in forex, it doesn't actually need much on definition at all, right? It's more of practical and understanding, right? So what do we mean by swing point? A swing point is a low or a high before market reverse. A swing point is a low or a high before market reverse. So when you have something like this is a swing point. This low here is what a swing point. This is swing point. All right. So that is a swing point. When you have something like this area is what a swing point. All right. So this is a swing point, and this is what a swing point. So the difference between this and this is that we have bearish swing point and bullish swing point. All right. So we have bearish and bullish what swing point. So when market is giving us something like this, so you can actually see that all these are swing points. All these are what swing points. All right. So this is what we call swing points. So each of these lows, this low, this low, this low, this high, this high, this high, they're all what swing points. So this is what makes the market. All this what swing point. All right. So the swing point and the what and the area of the market. So all these are the areas. All right. So we have the swing point and the area of the what the market. So now our major concern here is just the swing point. All right. So now let's look at the market, and you can actually spot swing point here. Now you can see that this is a swing point. Market give us what a swing point here and reverse a little, give us a little buy, a little what trend to the upside. All right, you can actually see it on all time frame. You can actually see it on all time frame. Now let's see, for example, on this time frame, you can see what a swing point here. You can see 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 a swing point here. So you can actually spot many swing points here on this chart. Many, when I mean many, is what numerous. So you can actually spot as much as you can, the major ones, right? So all these you are seeing here on this chart are swing points. All right. So all these are what swing points. Now So after market give us all these swing points, inside this swing point we have what we call bearish swing point, and what that is a swing point high and a swing point low in a simple term. All right, so we have it as what a swing point high and a swing point low. So all these ones are swing point lows. All this one I'll be marking here are swing point low. Why? Because they causes what a buy move. That's why we call it what a swing point low. So why? Because after you have a low before you have a high. All right. Why? After you have a high before you have a low. When market is going down, but if it's going up, that means you first have a low before a high. When market is going up, when market is going down, you first have what a high before you have what a low. All right. So that is the simple term. So when you are looking at this, all these are what swing point low, swing point low. So those are what swing point low. You can actually what detect here in this market. It happens on all time frame, right? You can actually see it here. So there are some little ones, little swing point low on this daily time frame. But when you go to H4, when you go to what H4, those swing point, those little ones can actually be what big. Why? Because on daily time frame, you will each day, or let's say for example on 1 hour time frame now, all right? On 1 hour time frame, you can actually have swing point low, swing point low, swing point low, numerous, all right? All these swing point low that you are seeing here on this hourly time frame or on this 1 hour time frame, on daily time frame, you know that one candle formed on daily time frame will give us 24 candles on 1 hour time frame. You should understand that. So if we have up to like uh 4 daily candles in a bullish trend, let's say 1, 2, 3, 4. Now when you look at this area, we have 1, 2, 3, 4. So these 4 candles that you are actually seeing here, 24 times what 4, that's what market will actually what give you around this area on what 1 hour time frame. So market will automatically on this 1 hour time frame, it will give you up to what 90 96 what candles. It will actually give you what up to 96 candles. So when you come on this time frame, you look at it, it become a swing point low. It even give another swing point low before market what started selling. All right, so those are the ideas of what swing point low and swing point highs. So you can actually spot it on all time frame. So you can actually see it here. You can actually spot what swing point high and swing point low on all time frame. So that is that for today series. So our next series will be communicating more and other stuffs and more in depth on what we are actually doing here. So good luck. See you guys in our next series.